You see, we are back, and we're back in our planning series. Last week, we worked on estate planning. We talked one day about what's in your estate, what's not in your estate, what's probate, what's non-probate. We talked about that. Then we talked about how do we use trusts in our estate planning. Today, we're going to shift gears totally because reason a lot of us are staying home, the reason a lot of you guys are watching this video right now, well, it's because we're staying home and because we got the coronavirus. And a lot of us have small businesses. We work for a small business, and there's a lot of things going on with our economic security. Last week, Congress passed the largest piece of legislation, I believe, in its history, a $2.2 trillion, that's with a T, trillion-dollar bill designed to pump start the economy so that when we get through this, and everybody, we're going to get through this, we're going to get out there and we're going to need to be working. We're going to need to have our jobs. And Congress and the President, they're working on trying to make sure that those jobs are there for us and that our businesses are there for us. So we're going to talk about business continuation. You can see I mixed the setup a little bit. Rather than just sitting in the chair behind me, I've got some audio visuals. I want to thank everybody who had those ideas that perhaps having some slides or some cards might help. Not very technologically advanced down here in the basement, so I used my kids' art easel and chalkboard with this paper here, and we're going to go through everything that we're going to do today on this piece of paper here. So that ought to be fun, ought to be interesting. Today, can't see your comments, so if you make any comments or if you share the video, you have any feedback, you can either send me a direct message, be happy to answer those questions via direct message, or if you want them to share for the public, please do put your questions in the comments and we'll answer them. Or if I can't answer them, I'll try to get somebody, another professional who might be able to answer them. So let's delve into business continuation. So what do we need for business continuation? We need money. So where is that money going to come from right now? Well, the federal government has its own printing press. And through the Small Business Administration, the SBA, and the C.A.R.E.S Act, we are going to have different ways of getting your small business money. Again, the whole idea here, and we're talking about business continuation during the age of coronavirus. And what we want to do is we want to make sure that those small businesses who are in place, especially in areas like Pennsylvania, in New York, in different cities, California, where you might be experiencing a shutdown or a stay-at-home order, or you can't go into work, or let's face it, you might be sick, you might be taking care of somebody who's sick, or you might just not want to get sick. You want to make sure that your wages, that your job, that your business is still there. And we're talking right now about small business provisions in the C.A.R.E.S Act. We're not going to get through everything today, but we're going to get through a couple really important provisions of that C.A.R.E.S Act. And here we go. There are three programs we're going to talk about today. First is the Paycheck Protection Loan. That's most of today's presentation. What is a Paycheck Protection Loan? Who can get it? Who can qualify? And how do you pay it back? And here's the real fun part. Spoiler alert. A lot of it can be forgiven. It's like going to be free money, but you got to use it properly. And we'll talk a little bit about that. What is an EIDL grant? We'll talk about that. That's a grant of money that doesn't have to be repaid as well. I know it got everybody's attention because the federal government's out there giving out money. The last thing we'll talk about are loan subsidies that are available, again, through the C.A.R.E.S Act. Now, we're not going to be able to address every single question that you might have. There's some nuances. There are lawyers and accountants and government workers trying to figure out exactly how this is going to be deployed. But we're going to give you a good overview, and we're going to send you to some good resources today. So, starting off with the first program. The first program is Paycheck Protection. So, who qualifies for paycheck protection? Now, this is great because if your business has 500 or less employees, and that was my attempt for a little less than sign, if you have less than 500 employees, or you might be self-employed, or you might be a subcontractor or an independent contractor, or you're a nonprofit, the key is that you got less than 500 or less employees, you are probably going to qualify for Paycheck Protection loan from the SBA. What else is in there? Well, how much are you going to qualify for? You're going to be able to qualify for 2.5 times, 2.5 times multiplied your average monthly payroll in 2019. Average monthly payroll. Actually, the law uses a term called payroll expense. And how is that calculated? Well, there are a lot of different aspects into it, but to suffice it to say, any wages that your business pays, any wages, salaries, other compensation, as long as that compensation isn't above $100,000 per year. We are only going to count prorated amounts above $100,000 a year. This bill is definitely focused on getting money into the hands of our workers so we can keep our economy moving. We can keep, again, those small businesses running and keeping people employed. Their health care expenses are also part of that payroll expense. State and local taxes. There are a lot of parts of payroll expense that go into this 2.5 times the payroll expense. So what you're going to do is you're going to look at the comparable period a year ago that it's covered for, and they call it covered period. The covered period is February 15th, 2020 through June 30th of 2020. That period keeps on coming up because it determines the reference points for how much we're going to talk about when we're talking about average monthly payroll. So we're going to go back and we're going to take a look at that amount, that average monthly payroll, and you can borrow from the SBA or from your lender, actually. It's going to be guaranteed by the SBA up to 2.5 times average monthly payroll. All right, that's great. Now I've got this money. They're going to want us to pay it back. But how can we use it? So we can use that money. Again, if you use this money from February 15th, 2020 through June 30th, 2020, and that means any expenses that accrued previous to the law being passed. So there's a pretty wide window here. So if you use it to use payroll expenses, if you use it to pay mortgage interest on a mortgage that's already in place, you can't go out and get a new mortgage, but if that mortgage was already in place, you can use it to pay the interest portion of the mortgage. You can use it to pay rent. Your business can use it to pay rent. You can also use it to pay utilities. Now, utilities, again, very broad number. When you're looking at utilities, we're talking about traditional utilities, your water bill, your electric bill, your gas bill, your energy bill. But we're also talking about telephone bills. We're talking about telecommunications. In some cases, we can talk about certain transportation costs. We're also talking about, of course, broadband internet access that your business may use. So utilities is used very, very broadly. So you can use that loan that was 2.5 times your average monthly payroll to pay these expenses. These are qualified expenses. So when we look at it, what are the terms that you're borrowing this money on? Well, first off, it's a 10-year term. You'll have 10 years to pay the money back. That's pretty good. And there's very little underwriting, and we'll get into that in a second. Interest rate, very low, 4%. This is a 4% loan payable over 10 years. And the first payments are deferred for up to 6 months. So you get the money, you close on the money, you have it for your use, for using for payroll, mortgage interest, rent, utilities. And you don't have to make a payment for 6 months. Good stuff there. So pretty generous, pretty easy repayment terms. But wait, there's more. You don't need to put up any collateral. You're not putting your business up for collateral. And again, we're talking about some economic options available under the C.A.R.E.S Act so small businesses can stay operational once we get through this coronavirus scare, once people get back to work. We want to make sure that when people are ready to work, there's a business there for them. And when business owners are ready to get people back to work, that those people are able to come back to work. And that's what this law is doing. So we're talking about one of the first provisions of the Coronavirus Response Act, which is the C.A.R.E.S law. And we're talking about some provisions. And we went through a whole bunch of borrowing provisions under the Paycheck Protection Loan provision. But if you're getting one of these Paycheck Protection loans, No collateral. You don't have to put your business up. You don't have to put your assets up. And most importantly, you don't have to put your personal guarantee up. So if you're a business owner, you're not risking your house. You're not risking your personal assets by taking one of these loans. One qualification though, if you take this loan, it's possible that you might not qualify for some other new tax credits that are out there. Very important that you get right advice when you're taking these loans, because you want to make sure that you're putting your business in the right program. If you're looking at all the different ways and all the different options that are out there, to make sure that you're doing your option very, very advice and you understand which program you're signing up for. I hate to see somebody say, oh, I would have rather had this tax credit than this loan, or rather have had the loan than the tax credit. If it doesn't make sense for your business, make sure you're doing everything with your eyes open and you're talking to the right people. There are lots of people out there that are looking to help small business owners and people who've been affected by this coronavirus. One of the best things about this coronavirus situation is that we are seeing lots of people, lots of businesses, lots of small business owners stepping up really to try to help out their fellow man, their communities, and their economy. So we have some good stuff going on there. But bottom line, make sure you get the right advice when you do this. So those are some of the other terms. Now, what's really exciting about this loan is a lot of it, up to 100% of the principal. That's right, up to 100% of the principal can be forgiven. So if you take that 2.5 times your average monthly payroll loan and you spend it in what's called a qualified way, the way that the government wants you to spend it, if you spend it in those ways, every single one of those expenses may be forgiven. So we have those. So if you spent or incurred an expense between, and forgive my handwriting here, February 15th, 2020 and June 30th, 2020, on payroll, on rent, on utilities, on interest on a mortgage, if you use these qualified expenses right here, those expenses can be forgiven. You would make certification with your bank. You would give them the correct documentation to show that you actually spent the money on those things. And then those monies can be given. The whole behind the scenes, about employees for a small business. It's really important that you know what steps that your business owners and that the people you work for are going through in order to make sure that your job is there when this coronavirus thing is over. Employers, small business owners, you need to be armed with the right information. We're trying to get you that into because it's really important. And this is an unprecedented program to be able to take out a small business loan at 4% and then have balance of it forgiven. The balance of it that occurs between the time you take it out and the time that the balance is forgiven. So that's very, very important. But you got to use it for payroll. You got to use it for rent, utilities, or interest on a mortgage. They want to make sure that this is being used for the general operations, the background, getting your employees to have money and making sure that they have a place to work when they come back and you're ready to get back into business. So there are some limits on the loan forgiveness. Very important that you understand the loan forgiveness. Because this is a program designed to keep employment up, we want to make sure that people are going back to work. So what they're doing is they're going to prorate it for any reductions that you have had for full-time employees. So if you had to let somebody go and you didn't rehire them, there's going to be a proration. So let's say you had 50 employees and you let 2 people go. 48 employees. Only 90% of those qualified will forgive it. 90% still forgive it. But the law is trying to 100%. It wants to forgive this debt if you take out this loan. The other at it is there's going to be a dollar for dollar reduction if you have to do somebody's wages or use somebody's salary, or a particular employee, which is prorated or some per pay, then there's going to be a dollar reduction on the amount of this. So that's important too. They don't keep people employed or replace people who have moved on to other jobs. They want you to also hire them and keep them at their particular salaries. Of course, you can't spend more than the principal and expect more than the principal to be forgiven. The principal is the upper limit of the loan forgiveness on this program. So, what else is there? Well, you can actually pay your tipped employees. So if you own a restaurant or some restaurant for some type of business where you have a lot of tipped employees and you want to make up their compensation, you can use this for your tipped employees. Statute is particularly explicit on that. What furlough people? You don't have enough work for them. Well, you have until June 30th, 2020. There's a safe haven clause, a safe passage clause, safe harbor, whatever you call it. You can get all those people back to work by 6/30. If you reduce people's salaries in order to keep them working, you have until June 30th to do that. You also are going to make your certification under oath. You're going to present all the information, whether that's about your employees and their wages, or whether that's about how you spent the money, but you're going to certify under oath, under penalties of perjury, that you actually complied with the statute. So those are things that are important to know about loan forgiveness under the Paycheck Protection Loan. And again, we're talking about options that are available to small business owners to keep their employees employed, to keep their businesses afloat once we get through this coronavirus scare. And again, I said earlier on in the video, we're going to get through it, and we need to make sure that we are ready to hit the ground running as soon as we get through it. Again, my name is Don Petrilli. I'm a small business and estate planning attorney with the law firm of C.A.R.E.S. And I spent a little time in the public sector for the past 8 years. Now, coronavirus scare really focused on getting people back to work and making sure our economy keeps running and keeps roaring like it was pre-coronavirus. So, we just do the Paycheck Protection Loan provisions. We've got 2 more provisions. It's going to be a lot shorter where we are reaching the end of today's session. The next one is called Economic Injury Disaster Loan. This is a long-time program that's been in place by the SBA, that if there's some type of economic injury due to a disaster, that there are low-interest, easily obtainable loans, and they expanded this program for the coronavirus to make it very easy to get immediate cash into business owners' hands. So what is that? So we have the EIDL, Economic Injury Disaster Loan. If you have, again, 500 or less employees, small business, and you're operating on January 31st, 2020, you qualify. So if you had your operations up and running, and you can prove that to the SBA and certify that to the SBA, you're going to qualify for for this program. And this program is very exciting as well. You can get up to $10,000 within 3 days. So when you apply, and there's going to be a place to apply online, you apply, you can get up to $10,000 3 days after you're approved. And I understand the approval process is supposed to go very, very quickly because there's not a lot of underwriting. You don't have a lot of bureaucrats and bankers and accountants and professionals tearing through this information. There's a pretty easy underwriting process. So when you say that it's pretty easy underwriting, is that you go to SBA.gov. There's a link on SBA.gov for this economic injury disaster loan. You do what's called a self-certification. You, again, certify under oath online that you need this money in order to keep your business operations running. Paying it back. You have to pay it back. Maybe. If you get one of the other loans, the Paycheck Protection Loan or any of the other loan programs that are out there, they will deduct the amount of your economic injury disaster loan, one of these quick $10,000 loans, from the proceeds of that second loan. It's almost like a refinance. But if you don't qualify for one of those loans, the amount will be forgiven. So it could potentially be $10,000 you don't ever have to pay. You don't ever have to pay back in order to keep your business up and running. The last program we're going to talk about, if you have existing SBA financing for your business, and many small businesses have SBA financing in place, or an SBA guaranteed loan, a bank that lent them money, but that bank has sought the SBA's guarantee of that loan, so the bank would eventually get repaid if the business doesn't work. Well, in that case, the SBA is putting together another program where they're going to have a loan subsidy for 6 months of principal and interest. Again, really, really exciting program there, that for 6 months, the SBA is going to pay your principal and interest on your business financing. Again, all of these things, whether it's a paycheck protection loan, whether it's one of these EIDL, economic injury loans, or whether it's a loan subsidy, it's designed to keep you in business, to keep your employees working. So if you own a small business, I encourage you to go to sba.gov, make some comments here on this thread. Share this video with your friends who think that it might be helpful for a small business owner, somebody who works for a small business. Make sure that small business owners are informed, because we really need to keep our economy rolling. We need to get it moving again, and we need to get it jump started. We can't just start off in a slow manner. We got to go right back where we were pre-coronavirus. So in closing, you got to be informed. We really need you to get the right information. Come to sba.gov. We'll answer any questions that we can via direct message or via comments on this thread. And most importantly, also, stay safe out there. We got to do a lot to combat this virus. We got to be smart. We got to follow CDC guidelines. We got to make sure that we are doing everything to keep our friends, to keep our neighbors, keep our employees and our employers safe, so we can return to the life that we can expect as Americans. So thanks for tuning in today. Again, ask any questions, leave any comments. If you found the video useful, share it to your friends. We're going to try to get this up on LinkedIn this time too. And we really appreciate everybody's positive feedback on our previous videos. Thanks a lot.